Hey guys, Danny Brown here with Myriad Real Estate Group, and I've been fielding a lot of questions today on the state of the housing market and how it relates to COVID-19. So I thought I would do a quick video and show you some graphs that I've been using when giving advice to clients recently. So this first one is, these all come from the Cromford report, and this first one here, this line, this black line across the screen shows where we should be for a balanced market between buyers and sellers. And this graph goes from, leading up to the bubble in the housing market all the way through today. And so you can kind of see the demand, was super high leading up to the crash, which we all know, and the crash was felt pretty hard, and looks like it kind of bottomed out here in about mid 2007. We did see demand start to increase due to the first-time homebuyer credit. Once that expired, then demand did go back down, and we were actually below normal again. And then we saw a lot of investors, Canadians, flippers, all those types of people were buying a lot of homes between 2010 and 2013. Once we got through those buyers, then we had what are called boomerang buyers. And those are buyers that had foreclosures, short sales, bankruptcies, something, had taken place back here to where they weren't able to buy a home for a long period of time, but they re-entered the market. And they really propped up our market from about mid 2013, into about 2018. And then we started to see a little bit of a dip in, towards the end of 2019. And that is mainly due to the Fed starting to increase rates, which impacted mortgage rates. And we were, talking about potentially going into a recession and how the Fed was being a little aggressive. Well, they since backed off of that, and through most of 2019 and the first part of 2020, we saw a big jump in demand for homes and values while the supply remained low. And so if I show you this next graph here, again, this straight line shows a balanced market between buyers and sellers. This black line is what is actually taking place in terms of overall demand. And the blue graph here is appreciation. So what you can see is that appreciation is operating upwards of 6 months to a year behind what's actually happening in real life. So, it's clear as day that everything is, happening after what's taking place in reality. So here towards the end, if you fast forward to 2020, we can see that there's a spike in demand and the market got really hot, and appreciation was not keeping up. It was just starting to race. And I suspect if COVID-19 didn't happen, that this would continue and would get pretty high. Well, COVID-19 did happen, and so I think that you're going to see a slowdown in this appreciation, and you'll probably start to see this line here towards the end come down a bit. But we are so far above a balanced market in terms of where we're at in demand. It's just crazy. So that's why we're continuing to see property values increase right now, and even though we're in the midst of a pandemic. So if you look at this next graph here, this talks about the relationship of supply and demand. So, Econ 101 talks about supply and demand, and those are constantly seeking balance. So again, we've got our line here that shows a normal market, and then we're all over the place. So again, this mess right here is the crash in the housing market. Look how far spread out these two are. So you had tons of supply, and the demand for homes was at its lowest. And then we started to peak, and that had to do again with the home buyer credit. And then we started to come down in demand, and then it came up. And then we saw this dip again. This dip right here in demand has everything to do with what was happening towards the end of 2018 into 2019 when the Fed started raising rates. Then we started to go back up, and then here you see this downward trend. This is COVID-19, directly related to COVID-19. So if this was the worst of 2018, when the Fed was raising rates, and this is where we're at due to COVID-19, we have a bit of a way to go before we're in any sort of danger. We're only just below 5% below what normal demand is. But look at where supply is. We're over 50% below where the supply should be for us to be in a normal market. And so when these two lines intersect, that means we're in a balanced market. So back here, even though we're below the normal line, we were in a balanced market for a brief period of time. Balanced market back here for a brief period of time between buyers and sellers. So we have a long way to go. And for the housing market to start to spiral, for prices to come down, for all of that stuff, supply needs to continue to climb and demand needs to continue to fall. So with the housing market, it reacts a lot slower than the stock market does. And I believe that we will be through this before these lines get anywhere close to one another. So I don't think that we're going to see a run of supply hit the market. The sellers that we're working with were either already listed or were in the process of listing. And it is normal for us to see demand start to drop. And I think that we'll just see supply kind of remain flat. So unless somebody has to sell, I don't see a lot of new inventory hitting the market. So I hope this helps. I hope this gives you a little bit of information on why we're kind of predicting what we are. And if you do have any specific questions, do feel free to reach out to me directly. And I hope you guys are all staying safe and healthy.